Welcome back to another Monday Market Update. My name is Brad Lupkus with Frontier Bank Wealth Management and Trust, and here's what the markets did last week. Last week, the S&P 500 was down for the first time in 3 weeks by about 0.5%. Year to date, however, the S&P 500 is still up 8.9%. In the small companies here in the United States, the Russell 2000 was up 0.4% last week. Year to date, however, it is still down 0.6%. If we turn our attention to the overseas markets and the developed markets last week, that index was up 0.1%. Year to date, however, that index is still down 5.25% as well. If we turn our attention to the emerging markets, which again is just companies that do business in places like China, India, Brazil, that index was up over 1% last week, bringing its year-to-date total up over 4.1%. If we look at some of the major headlines that came out last week, really the headlines were dominated by what's going on in Congress as they continue to negotiate a second round of stimulus. As far as economic data that was released, however, we got small tidbits of information here and there. The housing market appears to be quite strong right now, which is really not surprising when you consider how low interest rates are. A lot of people are buying homes currently. We also got some insight into the third quarter earnings of publicly traded companies. Last week kicked off what we call earnings season, where publicly traded companies released the results of the third quarter. And while it was certainly negative in the third quarter this year, it looks like we're going to be down about 16 to 17% compared to last year at this same time. Really the silver lining in that is that a lot of experts were predicting those numbers to be significantly worse than what they were. So while it's certainly not positive news to know that the earnings of a lot of companies decreased by 16 to 17% in the third quarter, it is encouraging that they are weathering the storm at least somewhat. If we turn our attention to the overseas markets, really two polar opposites of news in the overseas markets. In Europe, there's continuing concern about this second wave of infections that is going across the continent right now, and that has led some countries to re-implement lockdowns that they tried back in the spring. The obvious concern with this is that we all saw the devastating effects that the lockdowns had on economies back in the spring. And frankly, there's no reason to think that we won't see similar results with the European economies that get locked down again. In the Asian economies, though, if we look at countries like China, Japan, South Korea, it's really quite positive over there. It really appears that the Asian economies have not fully rebounded, but they're certainly getting close to back to where they were pre-pandemic. They have done a very good job, it appears, of getting a good grasp on the infections, and as a result, their economies have done quite well. And regardless of what skepticism you may hold about the numbers that come out of China, I always take a pretty healthy dose of skepticism when I'm looking at their economic numbers. The simple truth of the matter really does boil down to, though, that the Chinese economy is a major driver for the global economy. And when we continue to get positive economic news out of China, that really does bode well for the global economy as a whole. All in all, though, like I said, not a lot of major headlines in the prior week. It really did feel like kind of the calm before the storm leading up to the election next week. I would certainly expect volatility to pick up here this week and possibly into next week as well, until we get clarity on who or what the next administration is going to look like. If you do have any questions or comments, please feel free to leave them below. Thanks again for watching this week, and we'll see you next week.